Hedge fund manager Bill Perkins has found a way to make money out of natural gas and other areas in the energy space. He's Chief Investment Officer at Skylar Capital and joins me now at the GAIM conference in Florida. Good to see you.
Good to see you, thank you.
Now, it's interesting, you have a trader background and you brought your expertise as a trader into a new space. How has that helped you in your current position?
Well, I've been involved in natural gas since 2002 with Centaurus Energy, and then prior to that, other trading firms. Natural gas is a fast, rapid moving commodity, has multiple trends, and that suits traders very well. We're very adept at figuring out what trends are moving quickly. We are heavy into research. So using those risk-reward skills we've learned in prior trading analysis, using our fundamental analysis to figure out what's going to happen, natural gas is a great fit for energy commodity fund.
Now, nat gas was actually the best performing commodity in the commodity index last year, which is interesting because the price, it looks low compared to what nat gas used to trade up. You're benefiting from price swings.
Correct. Whether it's rallying or going down, we're able to profit on either side, provided that we're right, provided we did our homework and we got our analysis right. We basically make money off of volatile swings, identifying trends before they're happening and putting on a position.
In terms of this year, would you expect nat gas to perform the same way it did last year?
Every year is different. That's the $100 million question or $1 billion question is how will natural gas perform? We have a couple of dynamics that are moving and changing right now. It's whether supply will continue to grow or taper off. Has demand been induced based on these low prices? And are there other trends in demand or supply that may overtake the current level of fundamentals and be the primary driver of prices?
Now, are you still raising money right now?
Yes, we are.
Okay, so how big do you want to grow?
Right now, our target AUM is around $700 million. We feel that's a good number for our target returns to start out with.
And in terms of your client base, what is attracting people to your strategy, the narrow focus strategy?
Well, generally, it seems that people who are specialists in their field generally have a greater grasp of the fundamentals. So when things are changing rapidly or there's a underlying shift such as shale gas or the inducement of demand, the niche player, whether it be in natural gas or ags, will have an edge over the rest of the players. That's where we see our edges.
What did you make of the comments by the International Agency a couple of months ago talking again about U.S. gaining full energy independence?
I see that there are trends that would be true. I'm not as much involved on the oil side of it, but essentially the great job by the producers in terms of lowering their cost structure, the technology, basically moving natural gas from a guessing where it is game to a manufacturing process has made that a possibility.
Is the risk for you and your fund this year price swings, or is it how you're hedging those price swings?
Ultimately, the risk for the fund is determined by the risk allocator. So ultimately, the risk lies with the trader, not with the market. And that risk is do you get it wrong? There are large price swings based on weather. There are some random events, but basically a well-positioned trader and a well-managed firm will mitigate those risks.
Bill Perkins, great to talk to you.
Thank you for having me.
Thanks so much. I'm Rhonda Schaffler. This is Reuters.